For more on the latest market moves, let's welcome in Skyler Weinand, Regan Capital Chief Investment Officer. Skyler, it is good to see you. I want to start, maybe we'll start a big picture, Skyler, because you think we should expect a more tempered, slower growing stock market over the next few months. How come, Skyler?
Well, we've had a tremendous run up. Stocks have basically doubled since COVID. We're looking at 25 to 30% gains this year, on top of 20+% gains last year. And when you look at bonds today, the market's telling us the belly of the curve is actually raised almost a point since the Fed cut interest rates 3 months ago. So we're staring down 4.25% to 4.5% yields that should lead to tempered stock gains over the next year. But who knows? Hopefully Tesla and Broadcom can lead us out of that.
Yeah, I mean, they've been doing that so far, right? And just generally, the large caps have been doing that so far, Skyler. So where do you put your money then? I mean, because we sort of don't know, right? And like you say, all things being equal, maybe in your view, the stock market should be having a choppier time than it is. Are there things that are going to perform whether there's chop or not?
Yeah, I think those big names will continue to do well. One thing you have to pay attention to, I think the two most important charts I look at regularly are U.S. net wealth, and the Fed just updated that for Q3. U.S. net wealth, this is household wealth, is up to $160 trillion. It's up $55 trillion since COVID. So U.S. net wealth has grown about 50%. And then I also look at corporate balance sheets. Corporate debt as a percentage of equity, i.e. corporate leverage, is lower than it's ever been in recorded history. So households and corporations are sitting in an excellent spot. They have a ton of cash, ton of built up home equity as well as equity values. So you have to stay invested, but maybe you pull back. What hedge do you put on? You probably sit more in cash. You're getting paid 4.5% to 5% right now on the front end of the yield curve. You can go and find investments out there at 6 to 7 that are extremely safe. So build up your cash position and build up those really high yielding, low risk instruments on the bond side.